Hello everyone and welcome to my daily report market videos on Wednesday 3rd of July with me, Richard Perry, market analyst at Hantec. There's been a big shift actually in market sentiment since yesterday afternoon. Really, the move came on the back of Mark Carney, Bank of England governor, who talked up the prospects of the Bank of England turning to stimulus measures. Concerns over the global slowdown, concerns over potential no-deal Brexit, and the Bank of England previously had been always saying that it was looking to raise interest rates if it could, given obviously the Brexit uncertainties have been restricting it. But still, in the comments from Carney, that those expectations have been significantly revised lower, and sterling fell away. But also there was a marked move on gold. Gold jumped around over $40 in the space of 10 hours yesterday. We also had the announcement that Christine Lagarde was going to be taking over from Mario Draghi. She's seen as a dove on monetary policy, and certainly that again added to the whole outlook that of a more easy monetary policy for longer from global central banks. So it really did see gold jumping higher, but way back above $1,400. We saw the yen strengthening. That has pulled dollar yen quite considerably lower back again. And interesting moves that we've seen on equity markets as well. We've seen a breakout on FTSE 100, and you've also seen the DAX above 12,600. All key moves that were coming through these equity markets. In terms of the S&P 500, it was slightly higher yesterday, and continues to look as though we're going to see gains again today. The early morning I came in and S&P futures were around about 0.1% lower. They've actually turned around as the European markets have kicked off, and that mood of optimism in equity space has taken hold. But it'll be interesting to see if these moves can continue, really, given the fact that the reason behind these dovish moves on equities, from central banks have been over market fears of global slowdown, and obviously the length of time it's going to take for the trade dispute to be potentially resolved between US and China. So yeah, really interesting moves. We also saw moves into treasuries again, with the 10-year treasury yield moving back below 2% on a decisive basis yesterday, and that move continues today. So it all points towards lower yields, yen strength, gold strength, all fairly well safe haven orientated there. So in terms of data points today, the next picture painted by the PMIs are going to be on the service sector, and this is coming out in a bit on the UK, but also we're looking out for the US service sector, which is the ISM non-manufacturing PMI this afternoon. Initially, we've had the upward revision on the Eurozone data, coming in a slight upward revision to the 53.4 to 53.6 on the final data, and that has seen the the composite PMI ticking higher as well by a tenth to 52.2. So not too bad there on the data there. We're about to have imminently 10 seconds away, about to have the services PMI data for the UK, 51.0. Let's see what it comes out at. 50.2. So again, a downward surprise there. We're likely to see cable falling quite strongly on that. That means that the composite PMI falls below 50. Contraction territory for the UK economy. It's not great there. Okay, this afternoon we're looking at a lot of US data. We've got the ADP number, 140 up from 27. What sort of a read-through does that have on payrolls? We have the deterioration of the international trade balance to $54 billion on the trade deficit. Jobless claims around the same, 223, and then we're looking out for the ISM non-manufacturing PMI at 55.9. But that those numbers are certainly for the UK not looking great. Okay, so my chart today is Euro Yen, which has been under pressure in the last few days. Let's pull out though and look at the fact that this pivot band between 123.35, 123.75, this band that's the euro yen has turned around repeatedly throughout 2019, failing at resistance repeatedly now. And again, another rally to 23.35 this week, sold off, sharp bear candles, renewed downside pressure, RSI failing, MACD lines looking like they're about to cross lower. Stochastics have crossed lower with downside potential. 127.75 looks to be on again for a test. Now we've just seen a move today, breaking below 121.60 area, which is a little higher low. So that really does put the pressure back on 120.75. A breach of that really does open that spike low from January at 118.70. But we can see on the hourly chart where we've got negative configuration on momentum indicators, RSI failing at 50, MACD lines deeply negatively configured. You'd be looking to sell into strength. So you've got the initial resistance around this pivot at 121.60. Interestingly coming in as resistance today, but if it does move above that, anything towards 122 area I think is a chance to sell. 122 to 122.25 area I think is a selling opportunity on that, but it certainly looks like euro yen is going lower, and any unwinding move I think is going to be seen as a chance to sell now. So I wish you good luck in your trading today, and I will speak to you later.